what exactly is JOLTS and what does it tell us that the jobs report doesn't? For more on that, let's bring in Brian Chung with this week's Yahoo You. Brian.
Well, Kiko, class is in session, a little summer school action going on. And as you mentioned, everyone loves the employment report, but there's another just as important report called JOLTS. It's a pretty fun name, but it stands for the Job Openings and Labor Turnover Survey. And especially within the context of a pandemic, JOLTS can tell us a lot that the employment report can't. So let me explain this. What you're looking at here is a chart of total non-farm payrolls. This is data that we get from the big employment report we like to cover so closely here in the financial press. And it's important because it tells us how many people were at work, but also how many people were not at work. So it gives us a pulse on unemployment. But think about the statistic of there being right now about 146 million Americans at work. Well, okay, that's fine. But how many of those 146 million Americans moved to new jobs between months? How many Americans maybe quit jobs that they had? How many job postings are there? You're not going to get any of those answers from this specific statistic. Now, JOLTS has all of those answers. So basically what it does is it surveys businesses to get a pulse on hiring trends and job turnover. So it tells us things like how many job openings were there in a given month, how many people were hired in that given month, and how many people left jobs that they were previously in. Now, in total, these will all give us a really good picture of the churn within the labor market. So how many workers are coming in, how many are leaving, how many are moving, and et cetera. So let's take a second on this bit, separations, because it's really important. Now, as many people will know, there are a lot of ways to leave a job. And the Bureau of Labor Statistics breaks this out into three different categories. So the first is quits. And this is going to cover the people that voluntarily leave a job. So maybe they just found a better paying job somewhere, they're getting better benefits at another place. Then there's also layoffs. So layoffs cover the people that left a job at the company's decision. So that would be a layoff, obviously, or firing. But other separations is kind of this catch-all for all the other reasons for leaving a job. So retirement, for example, or death. Now, if a lot of separations in a given month are layoffs, then that's a bad thing. And we saw that in the depths of the pandemic when the amount of layoffs in the JOLTS report really spiked. But it raises questions about how do we interpret quits, voluntary leaving of a job. Right now, quits levels are at highs that we really haven't seen since the beginning of the JOLTS survey in 2000. In fact, the latest statistic that we got for June was about 3.9 million people quitting. And the only higher number that we saw was the 4 million people that quit in April. Now, higher quits are often associated with tighter labor markets where there are a lot of job openings, and that's indeed the case right now. As Akiko mentioned at the top, job openings right now from the JOLTS survey as of June were over 10 million. That's another record for the JOLTS report. And this shows that there are options for workers to move over to new and better jobs. Otherwise, people wouldn't be voluntarily quitting their jobs. Now, what's really cool about JOLTS is that it gives you really granular detail on industry by industry turnover as well. It's really easy to get lost in this report. So I pulled this data for quit rates. Again, these are not levels, but these are quits as a percentage of the population of people working in those industries. And you can see that when you look at manufacturing, retail trade, both of these industries are seeing higher quits rates now, which is the highlighted blue section in June 2021, than they were in the same month last year, June 2020, which is delineated in the purple bars here. But I also want to point out, more importantly, leisure and hospitality. We know that this is a particularly hard-hit industry in the depths of the pandemic. So this is going to cover the bars and restaurants that you eat at. Quits rates were about 5.3%. That's a 20-year high. So a lot of people in that industry were quitting in June, likely for other jobs, maybe better paying jobs in or outside the leisure and hospitality industry. So if you put the pieces together, it shows us that right now, the labor market is giving workers a lot of choice because there are so many job openings, over 10 million. People can shop and see if there are better opportunities out there. Can they get better incentives? Can they get better pay? Can they get better hours from other places? So this really underscores the worker power in this type of industry. And all this type of information is stuff you wouldn't have gotten from that employment report, which just goes to show it's not just that headline jobs data that we get the first Friday of every month. Also pay attention to that JOLTS data as well, guys. And that wraps up this week's Yahoo You.
Professor Brian Chung bringing us the latest. Always impressed. Not just one, but two college pennants behind you. That's the key thing here. Akiko?
Yeah, right. I didn't notice it's Johns Hopkins now. There you go. I thought it was all about Syracuse.
Just added it. Just added that one.
I'm going to have you try and connect the dots here because you pointed to the employment report as well as the JOLTS report. You sort of combine it to get a bigger picture. If you look at something like leisure and hospitality, which has had record quit rates, where are those people going? Is there any data that points to where that job migration is happening?
Yeah, and that's the difficult part of this data. Now, as I mentioned, the JOLTS data is extremely in-depth, but it won't necessarily tell you where each individual worker is going to go. You kind of have to put the pieces together, but you can kind of measure the inflows and outflows out of certain industries to see maybe if, for example, there have been more quits in the leisure and hospitality industry, and then let's say more job hires into other types of industries. I didn't show you hire data, but if you can look at that through the jobs report in other types of industries as well. Maybe you can put together the pieces that they're going from one industry to the other. But of course, you probably have to do a little bit more digging beyond the BLS data to figure out anecdotally reasons for why they might be leaving the industry if they are leaving the industry. But again, a lot of that data could just be people moving within the industry, just leaving their firm. And the reason why is JOLTS actually interviews individual businesses. So they're asking them how many people left your business. So just because there are quits in the industry that are being highlighted by the JOLTS report, it doesn't necessarily mean they're all leaving the industry. And then one other point I want to point out really quickly is that a JOLTS data does come out on a lag. So we did recently get the employment data. People will recall that we got July data last Friday, but the JOLTS data that we got at the beginning of this week is lagged by about a month. So the JOLTS data that we got this week covers the month of June, not the month of July, which the BLS just reported for the employment report last week. So we have to always keep that in mind when you're comparing one to the other, that the JOLTS data, because it's so comprehensive, does come out a little bit after the employment data does.
Yeah, so many different pieces to kind of put the puzzle together on the employment front, but appreciate you doing that for us and explaining a little bit more in detail all about that JOLTS report. Brian Cheung, appreciate it.